Good afternoon, latties. How we doing? Alright, let's fucking get into it. So, the most recent video that was put up, I just called Squeeze. Something nice and simple. Obviously, we'll get some attention of some sort, but nothing bombastic and flamboyant, like a bunch of rocket emojis and fucking whatever else is. And I'm still committed to that particular take. I do think we're going to see some decent movement coming here in the next week or two. In the meantime, I wanted to highlight what my strategy will be, because the past 2 or 3 times that this thing is actually like taken off, I was only playing one side of it, which was really stupid and really myopic. And so now that I have all this wisdom, so to speak, and a more intricate understanding as to how markets work and how you can actually maximize playing a stock one way or 2 ways or even 3 ways if you're into that, I wanted to at least share it, because I think there might be some opportunity in it. And of course, none of this is financial advice. Don't even get me fucking started on that. Yeah. So I'm gonna hit some nicotine real quick. We're gonna get into this. So here is AMC on the daily. This will practically be mimicked. This particular strategy will mimic GameStop as well, and a lot of the other meme stocks, like Riot, Marathon, anything that has a high beta with crypto. Basically, we're going to see a lot of growth, I think, once markets actually do find a temporary bottom. And I think with that, a lot of the bears will be covering their shorts, and that means that anything that's not a blue chip will see some form of love and attention finally after 6 cold months of just red. Yeah. So, what are we doing here? What are we doing? This is the daily. This is the daily of AMC. We'll check out Riot. This is a crypto-based equity. A lot of its balance sheet resides in crypto. And here's Marathon. Marathon kind of has my attention more than Riot personally. As you can see, we have a very good indication of where our tops look to be taking place at. Accumulation, distribution, distribution. And now we're starting to have this very nice, not cooling off necessarily, and I hate to use this term because it often gets thrown around like a cheap whore, but mean reversion. We're starting to see that we're getting some evenness to the trend after it had been going downward for so long and so vehemently. I'm going to go back to AMC though. A lot of these tickers, however, are very tied together, and the way that Wall Street treats them is practically synonymous. And so with that in mind, there's plenty of opportunities for arbitrage here, or pseudo arbitrage. And here's the approach. We're going to buy leaps. And when I say we, I'm just speaking generally, not you. Don't get me started. God damn it. We're going to buy leaps that are 25 to 40% out of the money with at least 6 months of expiration or time to them. And as we achieve new legs up, and assuming that we get signs from the broader market that things are finally starting to alleviate, whether that has to do with midterms, the UN calling on the US to quit it with the rate hikes. Guess Volcker's approach didn't work for J-Powell. This is and that's. The whole idea is that we're going to capitalize on achieving exposure to the equity while getting it at a discount, right? Otherwise, we would just buy straight up shares, and that might happen later on. We might exercise our leaps for shares and then sell covered calls against them. But in the meantime, we're going to be buying these leaps, and about 50% of our portfolio will be allocated to that. The other 25% will be going towards short-term strikes like weeklies, maybe monthlies, depending on how long this particular phase in the market lasts, if it even happens. And then another 12.5 to 15% will be allocated to short-term puts to hedge. And the whole idea is that as we achieve new levels, assuming that things actually come to fruition, we have upwards to about 200% worth of room if we're assuming that the Wyckoff Snippy Snipe is right. It is. And after each leg up, if we're assuming that we do get these moves that we're anticipating, and this is, don't get me wrong, even more idealistic than what I want to be, but just for the sake of argument here. Each time we achieve one of these particular levels, we're going to tap into some very long-term, out-of-the-money puts. And the higher this goes, the more we're going to be buying puts, as well as cycling in and out weeklies for monthlies, and or exercising, and then selling covered calls or poor man's covered calls against those. And the whole idea is that we're going to be churning premium as this thing goes up and as it goes down. And the closer we get to a theoretical top, for example, here, there it is. For example, here, the higher this goes and the faster or the more powerful the velocity of it going up, the more we're going to scale into puts and buy them further and further out of the money. And ideally, what we want to see is something like this. I just had it. There we go. If we do get that crazy move, which, like, again, I'm hoping for, a lot of the portfolio will be allocated to something like this happening, but it will definitely not fucking last. So we're gonna really milk this bitch. We're going to assume that this is going to go back down again. And then eventually, oh, fuck no, I didn't just do that. I was thinking really hard of what a distribution schematic would look like. And we're just going to assume that it eventually finds these lows again, however that may look. And the further towards the top that we are, the more aggressive we will be in the acquisition of puts and covered calls. Now, ideally, with the timing here, that's ultimately what the true metric here is going to be, is how efficiently can we sell covered calls or poor man's covered calls, which I will be making videos about for anyone that's not familiar, just so everybody's kind of in the loop as to how those work. But the idea is that we want to sell our covered calls or our poor man's covered calls at the highest of the top, right? And that's not super easy to do. We do have plenty of tools and opportunities to do so, or resources rather. And the closer we can sell those to the top, the more premium we're ultimately going to reap. And ideally, the more premium we can collect and turn those back into puts. And then hopefully, the board of this particular company gets their shit together and manages or knows how to run a company sometime in the near future, in which case we will flip permabull. But in this case, I do see some relief that will come out in the broader markets, and I think that will take anything that has been neglected for the past 6 months due to conservative approaches to portfolio management by Wall Street. I think those will finally get some attention, love, and TLC. And we're going to capitalize on that. Ultimately, though, the macro of this is still going to be down throughout the entire market, not just meme stocks, not just anything that has crypto on its balance sheet. But in general, we want to really take advantage of the relief rally that's going to come into play, but ultimately position for the next downward move. And I think we won't really get a particular direction in markets until the next presidential election. I think once in the States, if it's a Republican or a Democrat, like anyone cares, but that's really going to decide what markets do in the long term for the next 2 to 3 years. So yeah, that's the idea. We're going to buy a lot of exposure to the long side here. And as things progress, start to buy into puts that are way out of the money. If we do get a really rapid upward move, we'll exercise and or sell covered calls and or poor man's covered calls, and take that premium and flip it into puts, and then try to just capture as much free money as possible by selling options instead of buying them. Same thing with GameStop. I do have a little bit more optimism for GameStop, but there's still a lot more that they need to do. But the same thing with Riot, same thing with Marathon. A lot of these companies in the future, when growth is a viable option and makes sense, when the markets permit for that type of behavior, I'm very optimistic on all of these. But right now, things are just a shit show. Speaking of Marathon, this does look really, really, really fucking good. Like I said, the mean reversion thing. But just in plain English, the trend has finally evened out, and this is actually a really great value spot for any particular investor to potentially take advantage of. As far as AMC goes for the week, this does look really, really good. Basically, I'm just looking out for these levels that the Snippy Snipe has in mind. The furthest, or the closest rather, point of distribution is sitting at 1050. So that's a lot of room. That's a lot of room. That's almost 100% move. Then after that, sitting at $12. Then after that is 13. And then way after that is sitting up at 18. And if we do get, an out of control move, there is no ceiling that the Snippy Snipe can see right now. So again, that's kind of what we're ultimately betting on, but at the same time taking advantage of the downward moves that show up intermittently. So weekly though, like honestly, everything is so compressed that we could see a 10% pop, like immediately in pre-market, honestly. And I think that with where futures are sitting, which are currently up 2.5%, that's going to call for a lot of portfolio managers and just algorithms in general that basically churn liquidity throughout the markets to start doing some intermittent covering. And if we do see a full-fledged bear market rally, which what we've been talking about for a week or two now, that would prompt for a move potentially up to 400 even on SPY. As stupid as that sounds, but that would be something that is definitely in the cards and would surely fit the trend for the next leg down, assuming that it's approximately 400. You could easily see that move take place over however long, and then take us to the next leg down, right? However you want to interpret that type of calamity. And it also provides the perfect rejection in terms of where all the previous rejections have taken place. There was a video that we had made not too long ago where I explained how we have this expanding effect taking place, where the lows are happening on this chart, just approximately. This is not by any means up to spec here, but we see our highs being relatively static, but relative to that, where the lows take place, the lows are actually getting lower, which ultimately creates that expanding effect. And I think with that taking place, again, you're creating a lot more room for things to get really hairy. But that 400 level happens to be where you would find that that next top to take place out of the 1, 2, and 3 that we have all throughout here. So if we were to see 400 being that next high, it fits within that trajectory. Back to AMC though, I just want to make it very clear, I'm not advocating fundamentally for this company. I think Adam Aron really dropped the ball and fucked things up, and the board is incompetent. But there is a very high amount of short interest, and going back to the macro of this fucking piece of shit, there hasn't really been that many convincing pieces of short covering from all of these levels. Anyone that shorted the top, bravo to them, by the way, would be up 86% and 87%. And if anyone is aware of the very basic theorem of the law of diminishing returns, if you can only profit 100%, then there's only so much you can milk out of it as you're approaching 100%. It's like an asymptote. So I do think that we'll see some considerable short covering taking place. Not MOAS, not anything that brings the world fucking crumbling down. None of that wishy-washy fucking make-believe bullshit. I'm sorry if that's your thing. Just consider how market caps work and what is it, 516 million shares times $10,000 as a share price. It just doesn't make sense. Neither here nor there, though. But I do think we'll see a considerable move, and I'm betting on that, and I think we're gonna see it. So, yeah, I will be making another video that's more in depth as to how we're gonna manage this portfolio, kind of what the strategy entails, and how we'll try to really maximize the efficiency of it. So I'm gonna leave it at that. I might be live tomorrow. We'll find out. And then I do plan on having weekly updates, or daily updates rather. Yeah, so that's it. Stay black and ciao.